I know shipping is taking up most of your time, but let's talk about airlines first so we can get that out of the way. Your initial assessment, early assessment of how this holiday travel season or this week has been?
Yeah. To be honest, in July, if somebody would have asked me, what's your expectation from the Golden Week? Needless to say that we were expecting a very, very strong Golden Week travel, pretty much because summer was kind of a washout. But with China's zero COVID policy, with the cases erupted in August and then subsequently in September, by the time the COVID cases were under control, we were very too close to the Golden Week holidays. So in hindsight, these numbers are not necessarily of your current expectation, let me put it this way.
You still have buy ratings, though, on the big three. Why is that?
So as we highlighted in our August note, right, from a stock price perspective, they have fallen down back to March 2020 levels. And in the last 5 or 6 occasions, what we have seen is that the moment COVID cases are under control, we have seen domestic travel recovered back to 2019 level. And so far as big three Chinese airlines are concerned, they are much stronger financially than they were ever been in any previous crisis. And as soon as the COVID cases are behind, we again expect the domestic travel to go back past to pre-COVID level. And this is where they make most of their money. All what Chinese airline needs for their return to fly beyond their cost of equity is some sort of relaxation in international travel. Whether that comes in second half of 2022 or 2023, time will tell. But worst with respect to share price, we are confident that is behind.
Okay, let's try and put that in simple English. Assuming borders don't open within the next 2 years, you're saying at what point, 7.8 times book, these are a buy no matter what, really?
Yeah, so the catalyst may push to 2022 second half.
Okay.
But because the fact that big three airlines will be there, and the longer the crisis extend, it makes their weaker competitors even more weaker. Okay.
Now, just to pivot here, and because the energy story is also taken up most of the headlines, and I'm sure you've been busy, of course, calculating energy for ships and shipping and airlines. How do high energy costs now affect those models for not the model of the plane, but your models, of course, for these stocks?
I mean, see, for airlines, we already know where the jet fuel prices are. And at the end of the day, it will eventually be demand and supply. The fact that the global aviation international travel is still below. So far as jet fuel consumption is concerned, it is significantly lower than 2019. And that is very, very visible in the spread between the Brent and the jet fuel price. So far as aviation is concerned, Brent has not pretty much make a decent dent into the story yet.
What about for hedging, though, when it comes to airlines? Who's in the better position?
I mean, the big three airlines don't hedge. I mean, after 2007 crisis, they have decided not to hedge. Cathay always has a
they've always had an issue with
third of them. So third of their fuel consumption has always been hedged, and that is just on a rolling forward basis. So,
I was going to ask you about shipping. Let's pivot to that now, given this energy crisis. Do you think it changes the fundamentals in any way? What we're seeing when it comes to supply crunches, and it's just making these supply chains worse and worse, it seems.
Absolutely. I mean, see, so over the last few days, we spoke with a lot of the industry experts as well, and you are seeing a divergence in how the industry is looking at this versus how stock market is behaving. So far as container shipping lines are concerned, they have not seen any impact on demand or on the freight rate as yet. But that could be because a lot of the ready inventory is piling up and queuing up in the ports. And with the amount of congestion that we have seen both in the West Coast as well as in China, maybe it will be a few weeks later when we will realize that, okay, the delay in production have started to impact the trade. And so a lot depend upon how severe this power shortage be in the fourth quarter or leading into early next year. But for now, the industry fundamentals hasn't been shaken.
The Baltic Dry Index at 2008 highs. Every container costs I would imagine, are still quite elevated too. I mean, is this a banner year for shipping? Let's put it that way. And does it take away from earnings next year?
Yeah, in fact, now that's the key debate that we are also having. But from shipping lines perspective, while those spot rates of 10,000, 15,000, 20,000 makes a headline, but from shipping lines perspective, more than 50%, and in case of some of the industry leaders like Maersk, more than 90% of their head haul is on a contract. And the expectation is that irrespective of what happens over the next few months, the contract rates are likely to revise up. So far as shipping lines is concerned, probably at the peak of spot rate is around the corner. If it hasn't peaked, it probably will peak sometime soon. But I think what is the single largest risk that I could see is elevated commodity prices coupled with a higher shipping freight rate. At some point of time, it will going to take a knock-on effect on demand. And if the demand disappoints, then you will naturally see the congestion situation eases and the cycle rolls over.
And you're expecting those freight rates to actually, eventually it's going to rise, right?
Decline.
Decline.
Yeah, it has to be. I mean, see, this is a commoditized sector. And all else being equal, you just can't make a supernormal profit forever.
Yeah.
It will invite competition in one way or the other. So 2020 was a banner year. If you would have asked me the same question in fourth quarter of 2020, everybody were hoping that things will roll over. But I think the single message that I want to convey every time is people don't underestimate how tight the supply chain is. And whether it's an Ever Given situation or a Yantian port situation or a typhoon situation, the supply chain is so tight that it completely throws the supply chain into the water. So it's very difficult to say when the COVID-related restrictions will be eased, but that will be the trigger.
But what's your assumption, though, very quickly? How long are we going to be in this situation?
So our assumption is that spot freight rate will peak just around this quarter. And from the shipping lines profitability perspective, we will still be in a supernormal profitable territory in 2022, but it will come off from 2021 level.